Well guys, just a few days ago I released a video on Financial Education 2 around an analyst that believes that Uber stock might double in 2020. But the most interesting thing was I was reading in the comment section and somebody basically made a comment that they believe Uber stock is going to be my next GoPro stock. And this comment got a lot of likes, and this is not the first time I've seen comments like this in regards to Uber stock and it potentially being my next GoPro stock. And I've got quite a bit of money already invested in Uber. Okay, over $30,000 in one of my accounts, 1,100 shares in that one. Then another account, I own nearly $26,000 worth of Uber stock, 927 shares in that particular account. So needless to say, I already own a lot of Uber shares and I'm interested in buying more Uber shares if it goes down to $26, $25. But I have seen quite a few comments out there that some folks believe that Uber stock is going to be my next GoPro stock. And I gotta say, this is not the first time I've seen this. I know there's a lot of fans of the channel and fans of me that don't want to ever see me take a loss on a stock, and I definitely appreciate that. But I've definitely seen this a lot with Uber, and I gotta say, I did see it a lot with Tesla as well. You know, a lot of people said, Tesla was gonna be my next GoPro. Obviously, that situation has turned out very differently. A lot of people said ELF stock was gonna be my next GoPro because that was a downtrending stock and it was a low price stock, kind of like how GoPro was back in the day. Obviously, we ended up making 100% plus on our money on ELF stock in like a 6 to 9 month span. Tesla's going great. I think we're up 30, 40 something $1,000 on our Tesla shares, so that's going phenomenal. But I do understand a lot of people have skeletons in the closet because of what happened to me in the past with GoPro. We took nearly a $40,000 loss on GoPro. It was by far and away my biggest loss I've ever had to take on a stock ever, and that was obviously publicly documented on the channel. We talked about it a million times, and so I thought it would be important to talk about if Uber is the next GoPro, if this is the potential real bad situations. We're going to look at some fundamentals of these businesses and see if we can find some similarities between a stock like GoPro and a stock like Uber, and specifically going back to GoPro back when I had the bullish thesis around that particular stock. So I hope you guys enjoy this. Let's start getting into this. Smash the thumbs up button and let's go, guys. Okay, so first thing you want to always pay attention to is obviously a CEO of a company. A CEO of the company can drive the company to do great things or bad things, and stock performance over time is going to be pretty reflective of how a CEO does in their job. And so if we look at Uber stock, their company is led by a guy named Dara Khosrowshahi. I can never pronounce his name right, okay? But Dara is a really, really good CEO. He used to lead Expedia. He used to be the CEO of Expedia. And during his tenure as CEO of Expedia, which you guys know is a travel giant, right? The gross value of its hotel and other travel bookings more than quadrupled, and its pre-tax earnings more than doubled. And during his tenure as CEO, he bought companies like Travelocity, Orbitz, and HomeAway, okay? And so basically, he did a great job. So this is a CEO that's leading Uber that has done a phenomenal job at leading a big public company in the past, okay? So proven track record, very important from a perspective of a guy that knows how to do this, knows how to build out a business, expand a business, and run a stock up and have a stock perform well over time. So very, very important. Whereas GoPro was led by somebody named Nick Woodman. And Nick Woodman was a cool guy and whatnot, but Nick Woodman had never led a public company. He had never made the tough decisions you have to make as a public company CEO. He basically, started this business. This was his first successful business, and he was a really good entrepreneur, but he really didn't have any experience leading a public company, leading a big organization that has mass amounts of employees. And obviously, just look at GoPro stock chart. It is sad, okay? The stock chart over the long term will show you how a CEO does in that job. And obviously, if you look at just the stock chart of GoPro over the years, it's pretty obvious, basically how the CEO was. So I think that's the first thing we got to pay attention to. Two very different situations as far as the executives of these companies, and specifically the CEO of Uber. It's not even, to be compared to Nick Woodman. No disrespect to Nick Woodman, but there just shouldn't really be compared there, okay? So now let's talk about some fundamentals of these actual businesses and go from there, okay? So first off, we got to talk about the main business for GoPro and the main business for Uber. And are there some similarities there, or are they just very, very different, okay? So if you think about GoPro, Obviously, their main business is selling action cameras. Now, an action camera business is 100% a wants-based business. When you're talking about selling action cameras, it's not needs-based at all. It's, the guy that wants to go snowboarding and put a camera on his head. It's a person that wants to go snorkeling on Maui because they're about to go on vacation and they want a camera that can basically go underwater. They buy a GoPro. It's 100% a wants-based business, and I think this is very important to understand because wants-based businesses can, very much fluctuate. If it's really in style and everybody wants that want item, then obviously sales can go through the roof for a particular time. But when the things aren't as in style and it's a wants-based business, it's not a needs-based business, people just can forget about it and it kind of becomes irrelevant. And if you look at GoPro over time, basically they peaked around 2014, and since that time, GoPro has just been decline, and that's what we have seen from GoPro over time. Whereas if you think about Uber's main business, it's obviously ride sharing. And in terms of ride sharing, it is absolutely a needs-based business. People need a ride, okay? People need a ride to get to work, to get to school, to get from the airport, to get to the airport. People take rides for all, somebody drinks at the bar late at night and they can't drive home, they take an Uber, okay? There's a ton of needs-based things on why people need to take a ride service of some kind in a particular day. So if you think about just the United States, right? The two players that everybody knows about if you're going to take a ride somewhere, it's Uber and it's Lyft. If Uber and Lyft suddenly just the apps didn't work tomorrow, they just they just didn't work, there would be millions upon millions of Americans that would be completely clueless on how they're going to get to school, how they're going to get to work, how they're going to get to the airport, how they're going to get back from the airport. They're just what do I have to do? Do I have to try to take a taxi now? Do I have to walk to where I need to go? Am I going to have to ride a bike? People would just be in complete confusion if those two apps went down. And if you think about it around the world, we're talking about hundreds of millions of people rely on services like ride sharing every single day. This is needs-based stuff. This isn't like somebody, you have to be a really weird person to want to just take Uber rides all over the place. It's a needs-based business, and so therefore that alone differentiates from a GoPro in a massive, massive way. GoPro's completely want and Uber's completely need. I need to get over there. I need to take a ride. I need to take an Uber, okay? And Uber buys out their other needs-based rivals. So somebody like Kareem, which is a dominant player in ride-hailing in the Middle East, they went ahead and bought them out earlier in 2019 for a little over $3 billion. And then they have a big ownership stake in Didi, which is essentially the Uber of China, another needs-based market with a needs-based company. And we're talking about Didi's valuation continues to rise. A $62 billion valuation was the latest valuation there. So in terms of Uber, it's needs-based. In terms of GoPro, it was wants-based. If Uber just stopped working tomorrow, mass amounts of people would be in complete confusion and not in a good situation. If GoPro decided to stop selling cameras tomorrow, something like that, you'd probably have a few people dang, I really like those GoPros, but it wouldn't really change anybody's day. If all the ride sharing services went down tomorrow, it'd be a big bad situation, okay? Two very different businesses right off the bat, okay? Let's talk about secondary businesses. Let's talk about what else they had going outside of their main business. Well, in GoPro's case, it was an accessories business. This was really their secondary business. It was selling things like extra batteries, selling things like floaties for the camera so the camera wouldn't go underwater, or different housings and things like that. And so this accessories business for GoPro, it was very reliant on camera sales, because when somebody would buy an actual GoPro camera, they were much more likely to buy accessories along with that camera. It was actually their best time to basically purchase accessories. So basically if camera sales started to go down for GoPro, then these accessories, which a lot of them were also kind of wants-based things, those would go down as well. So it was a really, really bad situation. Another wants item that if the main want item, which was the camera, went down, accessory sales were going down. It's just a bad situation there, okay? Now with Uber Eats, this would be Uber's secondary business. And I would describe Uber Eats as somewhat of a want business, but somewhat of a need business, okay? So you think about it in this context. there's definitely a lot of people that go on Uber Eats and just the other delivery services, you say, Grubhub, DoorDash, Postmates, all those, type of ones that probably could easily drive to go pick up the food, but they might just be, lazy, and they might just want to be chilling at the house. They'd rather just have it delivered and pay that fee or something like that. So in that sense, it's a wants-based business, but there's also a needs-based business because some people don't have the time. It would be really inconvenient for them to drive 10 minutes to that restaurant, then 10 minutes back and walk in and things like that. The time is just much more valuable to them than what that, small fee they have to pay to Uber or something like that. Also, there's some folks that, might be disabled and whatnot, that it might be kind of unrealistic for them to go pick up food somewhere. So if they can have food delivered to them, it really makes it more of a needs-based business and a wants-based business. So, I can definitely see why Uber Eats could be considered a wants business. I can definitely see why it's considered a needs business. It's something in between, kind of a hybrid, but this is a highly, highly successful business, okay? This is now a multi-billion-dollar business for Uber, and there was a great interview done just a couple weeks ago, okay, with the Uber CEO, and Kara Swisher. She asked a question. She's always super negative, especially around Uber, and she's like, what's your guys' Amazon Web Services? Because Amazon Web Services is now looked at as like the magic pill, okay, for Amazon that, kind of built Amazon's profits up and whatnot. She's like, what's your Amazon Web Services? And the CEO, he went through the math with her, because she's like, the math doesn't add up with Uber and whatnot just because they're taking losses here in the short term. And he goes through the math with her, and he's like, you actually do have to do the math. He kind of like owns her. And he's like, the ride-sharing business will be our Amazon Web Services, and Uber Eats will be Amazon Web Services 2.0, okay? We have 2 Amazon Web Services coming for us. We don't need some magic pill to suddenly work for a company or something like that. And so Uber Eats it's already a highly successful business. It will get a lot better in the future. You have a lot of VC money out there right now sloshing around. So a lot of these, Grubhubs, DoorDash, Postmates, a lot of these players have a lot of money to play with here in the short term, and they're using it on promotions, and that hurts profitability for something like Uber Eats here in the short term. But over time, the market will stabilize, that VC money will dry up, and then this will become a very, very profitable business for somebody like an Uber Eats, okay? So needless to say, once again, big, big difference between something like a GoPro and an Uber, okay? Now let's talk about up-and-coming businesses. So we talked about the main business both these companies had, talked about the secondary business, so let's talk about the up-and-coming business. Well, in GoPro's situation, back when I was investing in stock, there was a ton of talk around they were gonna build a drone, okay? And this was super exciting. This was one of the bullish theses I had for GoPro, was they were gonna come out with this drone, and GoPro knows how to market so well that they were gonna get a ton of attention for the drone, and GoPro had built pretty good products up to that date, so there was a lot of belief that they could make this a success, get a ton of attention, and this could become a billion-dollar, a multi-billion-dollar business for GoPro overall, which GoPro was such a small business in relation to the big companies out there, that if they could create a $2 billion or $4 billion drone business, this was a game changer for GoPro stock overall, and this was something that could make the stock 2x, 3x, 4x in a very quick amount of time. So GoPro, they take forever. They delay this drone several times, and then they finally come out with it, and my bullish thesis starts to play out because this drone gets so much attention, okay? Casey Neistat on his channel, this is in the heyday of Casey Neistat. He does a video very positive around the GoPro drone. It gets 9 million views. And then the launch video in general for the Karma drone got over 28 million views on YouTube, okay? And never mind that, there were so many other follow-up videos people had did around the drone. This had so much mass attention that if you were at all interested in drones, you knew about the Karma drone and you knew why it might be a good product, bad product, or something like that. And I gotta say, right off the bat, they kind of didn't produce the most exciting drone out there, especially when the Mavic came out right after it. So they kind of, I don't wanna say they failed there, but it got a ton of attention. That was great. And the product was interesting enough to consumers. However, they had delays in this product several times, and then it finally comes out, and the drone is falling out of the sky. It's literally falling out of the sky, and all because a simple latch would come loose. It was the most ridiculous thing. It took them months to figure that out. It was, you know, this is what happens when you buy into a company with a CEO there who doesn't have a track record of being a successful CEO or a successful executive of a public company. You take a risk like that, and I learned that that risk is not a lot of fun to take, okay? And very shortly after, a year or two later, they actually completely shut down their drone business. It just wasn't even worth it. So it was just a disaster. The up-and-coming business that was, you know, so hyped about for years, that was one of my bullish theses, it completely failed because literally the drones fell out of the skies, and it just completely ruined the entire business model there. On top of, you know, a lot of, you know, management made so many mistakes. We could make a 6-hour video just about all the mistakes they made, okay? Uber Freight is the up-and-coming business that no one really sees for Uber, and this is a business that's really undercutting the industry of basically the middlemen that basically place a trucker in a delivery that needs to be made, and they're undercutting the pricing and making it actually a lot more efficient for the drivers and a lot of the shippers. So this is a product that's coming after a massive industry, which is, you know, hundreds of billions of dollars as far as the trucking industry, and it's having huge success. And if you're looking at the way this product's going, it's just getting bigger and bigger. We're looking at, you know, this is a business that's growing very, very high double digits, like 80% plus revenue growth. And we've seen some quarters where this business is growing 100% plus. And if you're just looking at it from the standpoint of truckers as well as shippers, a lot of them are very happy with this product. And I can definitely see this expanding and becoming a multi-billion-dollar business for Uber over time, and probably a very profitable business. But that's going to be, you know, further out. You're looking at more 3 to 5 years out. But if you're comparing these two companies, in my opinion, it's just very misguided. Two very different CEOs leading these companies, two very different main businesses, two very different secondary businesses, as well as two very different up-and-coming businesses. One looks like it's going to be a huge success, likely over time, and already is proving that. The other was drones were falling out of the sky. So I don't really think these stocks should be compared at all. I understand every time I ever buy a stock that is going through some troubles in the short term, which is pretty much every stock I ever buy. I bought Facebook when it was going through the drama, you know, last year or whatever. I bought Cirrus Logic in the past, Skyworks Solutions, all these stocks I make a killing on. I always buy stocks that are downtrending, so I understand why a lot of folks out there worry, and they're like, is that going to be the next GoPro for him? I understand that, but I just don't think, I think it's very misguided, and I don't think anybody's using like their brains to compare these two companies, in my personal opinion. But hey, I want to hear your guys' opinion down there in that comment section as always. And by the way, we got a crazy sale coming on the Becoming Master of the Stock Market course on Black Friday, and if you want to check out the pinned comment down there, that is going to be actually for signing up to the email list. So as soon as that deal drops, we'll send you an email so you can get in on that insane deal. We're going to do a price point we've never ever done in the history of Becoming Master of the Stock Market, which goes into everything I look for in stocks, as well as has a dividend investing mastery section. So I hope you guys really enjoy that deal when we launch it next week. All right, thank you for watching. Have a great day.